Let's take a look at all things money matters now. The JSE All Share Index is muted at midday trade, with investors weighing the prospect of higher interest rates and continuing to monitor Russian-Ukraine tensions. Domestically, there are expectations that further restrictions could be lifted soon amid a decline in COVID-19 infections. For a look at what's driving movement on the markets, we're joined by Chantal Marx, Head of Equity Research at FNB Wealth and Investments. Happy Friday, Chantal. Thank you so much for joining us. Is the sentiment reflected on the markets?
Well, it was this morning. Things looked a little bit better. And actually, as I was preparing for this interview, I was going to say that markets are positive, but a little bit on the skittish side. But just as I rechecked my screen, I saw that we were back in the red. A pretty severe downturn in the platinum miners. Specifically today, I see platinum and palladium prices are under pressure, and then generally the mining sector coming under pressure today as well. Copper prices also falling back a little bit. So that's really what is dominating the JSE today. The rest of the bourse actually doesn't look too bad, and if you look at some of the heavyweights on the bourse, Naspers up quite nicely, as is Process, which usually drives that market. So perhaps giving us a little bit of reprieve in this event.
Let's take a look at company news. Toyota's vehicle sales rising by 10.1% last year, making it the world's biggest car maker for a second straight year. Talk us through those numbers. Is there any indication that the chip shortage crisis is affecting them?
So the chip shortage really isn't affecting them as much as it is other automakers. And the reason for that is that they really jumped into action last year and the year before in order to smooth out their supply chain and make sure that they have the least problem when it comes to chip shortages. We didn't have a lot of numbers come out, only sales numbers indicating that they increased the number of units sold by 10% to 10.5 million units. That is absolutely massive. Volkswagen coming in second place, they actually saw a 5% contraction. Now, the chip shortage obviously plays a role. Toyota was a little bit better prepared. But what also plays a role here is the fact that Toyota actually has a very large presence in the US, whereas VW dominates in Europe. And we have seen the US economic recovery post the COVID-19 hard lockdowns in 2020 coming through a lot stronger than what we've seen in Europe. So that also explains it to a certain extent.
Solar company backed by Patrice Motsepe Sun Exchange has raised $1.4 million US, quite impressive, and they've done it via crowdfunding for a solar project in Zimbabwe. What should we understand of those developments?
So I think that we're going to start seeing a lot more of this. These solar projects make absolute sense. Installing them is becoming cheaper and cheaper and cheaper. Managing them is becoming a lot easier. And of course, people are desperate for energy, and in an electricity-starved region, which we can now probably categorize Southern Africa as, it's going to become very important for private sector players to start getting involved. I think it's a little bit easier in Zimbabwe right now, but things will probably start getting easier in South Africa soon also. I think with this 100 megawatt cap now being placed as opposed to a much smaller cap previously, we might start seeing something similar happening in the South African space as well. What was really interesting about this story, though, is that investors can choose in which currency they want to receive their returns, either rands or cryptocurrencies, and apparently most of the investors there are opting for cryptos.
Let's take a look at news from H&M. So they plan to double their sales by 2030 and to reach an operating margin above 10% by 2024. A tad bit ambitious or attainable?
I think it's pretty attainable, particularly because they aren't back at 2019 numbers yet. So they're coming off a less demanding base and an abnormal base, if I can put it that way. And doubling their sales in 7 years sounds very big. It sounds very ambitious. But when you break it down year by year, it's 9.1% per year. Historically, they've been able to grow sales by about 8.7% or close to 9% per year if you exclude the post-COVID-19 shock. So I think that it's definitely something that they can achieve, especially, as I mentioned, off this lower base. They also talk about an operating margin of about 10%. not too ambitious if you consider that they've only had an operating margin below 10% for the last 3 years. So they just need to go back to basics and need to do what they used to do in order to achieve that target.
Chantal Marx is Head of Equity Research at FNB Wealth and Investments. A happy weekend to you. Thank you.